Tesla's 3-for-1 stock split takes effect tomorrow morning. This will be the company's second stock split in 2 years. The first was a 5-for-1 split back in August of 2020. Since then, Tesla shares have risen 101%.
I think Tesla will likely underperform over the next few years, and people are better off picking up another horse. When you have a dozen real competitors in a maturing market, I think the relative valuation will be very, very different. And that is what's materializing quickly. Remember, there are going to be, about 500 EVs on the road by 2025.
In this video, on the eve of Tesla's second stock split, a Tesla bear embarrasses himself live on air, claiming investors are much better off investing in Tesla's so-called competition and saying that he believes Tesla stock will underperform in the coming years, and finally reiterating his absolutely ridiculous now split-adjusted Tesla stock price target, which equates to a whopping $83 per share. Just between you and I don't think it's Tesla stock that's going to be underperforming in the coming years, but Craig's 420 IQ predictions. So let's get into it. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks. Check out the links in the pinned comment below. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. So check out the links in the pinned comment below, and thanks for your support.
Tesla's 3-for-1 stock split takes effect tomorrow morning. This will be the company's second stock split in 2 years. The first was a 5-for-1 split back in August of 2020. Since then, Tesla shares have risen 101%. Joining us right now with what's to come this time around is Tesla bull Garrett Nelson. He's VP and Senior Equity Analyst at CFRA. Also, our bear this morning, Craig Irwin, who's a research analyst at Roth Capital. Garrett, why don't we start with you?
So before we hear from Garrett Nelson, let's just double check and see his history on Tesla stock. Is the man credible? If so, how credible? And if not, well, why should we even listen? So let's have a look at Garrett Nelson's past ratings on Tesla stock in particular. Might skip over the average return of about 1.2% on stock picks over the last 12 months. Who cares about the short term anyway, right? At this point in time, Garrett Nelson does have a hold rating on Government Motors stock. Okay. A hold rating on Lucid, and a hold rating on Rivian, a buy rating on Ford. No further comment necessary. So let's check out the Tesla stock ratings going back all the way since he began coverage on the company. So according to tipranks.com, Garrett Nelson first initiated coverage on Tesla stock back in February 2019 with a hold rating with Tesla's market cap under $60 billion. Following up shortly thereafter in July 2019 with a sell rating around a $50 billion market cap. Curious? In fact, let's zoom in a little bit further. By January 2020, Garrett is recommending investors sell Tesla stock with a market cap under $100 billion. The same month, another sell rating with Tesla around a $130 billion market cap. Then out of nowhere, flipping to a hold rating with Tesla around a $70 billion market cap. Another hold rating with Tesla having doubled to around $140 billion in April 2020. Then another sell rating in July 2020 with Tesla around a $300 billion market cap. And yep, another sell rating same month. Tesla around $300 billion. Garrett the Carrot recommending investors sell Tesla stock. Then, inexplicably, out of absolutely fucking nowhere, September 2020, suddenly, now he's recommending investors buy Tesla stock with a market cap well in excess of $400 billion. Want to rewind briefly? September 2020, buy Tesla stock, $440 billion. July 2020, sell Tesla stock at $310 billion. First buy rating followed up with another one, October 2020. Garrett recommending investors buy Tesla stock, market cap around $400 billion. Then, soon after, please hold Tesla stock. Now a $600 or so billion market cap, December 2020. Another one, same month, hold Tesla stock again around $600 billion. Then out of absolutely fucking nowhere, getting a bit closer here, recommending investors buy Tesla stock in 2020 with about a $1.2 trillion market cap. And it seems now Garrett has finally flipped to Tesla bull. Buy. Doesn't matter the price, just buy. So I think what I'm trying to say is, don't take it personally, Garrett, but you are absolutely not credible at all when it comes to Tesla stock. Don't get me wrong here. People are able to change their minds, and I understand that. We have about a 1-year history of this guy making any sense whatsoever on Tesla stock. So take everything he says with a Mount Everest-sized grain of salt. I'm not trying to be a dick here. I just want to make sure everybody watching understands the context, what this guy's been saying about Tesla stock, what he's been recommending investors do relating to Tesla stock over the past few years. To his credit, it does appear, however, that Garrett, despite being asleep for years, finally has woken the flying fuck up as it relates to Tesla. Of course, Time will tell.
You've admitted that just the stock split itself doesn't necessarily mean anything, but it does tend to mean something in terms of the stock prices afterwards. Why do you like this at this point?
That's right. Thanks for having me. So the impact of a stock split, of course, is really more psychological. Companies with improving prospects and rising stock prices tend to execute stock splits. And conversely, companies with deteriorating prospects tend to do reverse stock splits.
This is fair and reasonable.
But it is worth mentioning that academic studies have shown that post-split, stocks that do stock splits tend to outperform the broader market by a wide margin over the 1 to 3 year period following the split. We also think it's an attempt by the company to lower their share price as it might appeal to more retail investors. Tesla has a very avid retail investor base.
You don't fucking say. Obviously, we all know this to be true. How many 50, 60,000 plus people are going to be watching this video? By the way, just regarding Tesla's retail investor base, for those who missed it, I recently posted an exclusive video on Patreon where I reverse engineered approximately how many shares of Tesla stock my Patreon supporters own. And per the title of the video, wow, just wow. If you're a number nerd, check it out. Mind-blowing stuff. So Garrett has made a very important point here. Tesla does have a very big retail investor base, making them unique among large companies. In fact, unique among most companies on the planet. Fancy that. Another reason that Tesla is unlike any other company ever to have existed. And this is an important point. That being said, I don't think this is going to make as much of an impact as it could have. Most investors around the world have access to fractional shares these days. In addition, most investors who probably wanted to buy Tesla stock and originally couldn't afford it were already treated to a 5-for-1 stock split not long ago. So I don't think this is going to have anywhere near the impact it could have potentially a couple of years ago when A, most investors weren't able to access fractional shares, and B, Tesla hadn't already split the stock once.
Hey, Craig, we're calling you the bear this time around, but that may not be completely fair. You've got a neutral rating on this company. You do give Tesla props for the most recent quarter.
As everyone watching will know, I am an equal opportunity roaster, so let's see Craig Irwin's track record on Tesla stock going back as far as we possibly can. Here we are over on TipRanks. $250 per share price target. This is pre-split, so that's $83 per share post-split. What the actual Craig, seriously. I'm just going to focus on the most recent 3 years of coverage on Tesla stock here from Craig Irwin. Much like our good friend Garrett, back in 2019, slightly later in the year, our good friend Craig here was recommending investors hold Tesla stock, $50 billion market cap, give or take. Then out of nowhere, October 2019, same fucking month, gone hold, sell at a $50 billion market cap. Sell, $70 billion market cap. Sell, $70 billion market cap. Sell, $120 billion market cap. Sell, $170 billion market cap in May 2020. And again, out of absolutely fucking nowhere, switching to a hold rating, around a $300 billion market cap. Again, hold around 300 billion. And what do you fucking know? Hold. Now, I do just need to make a point. Besides the fact that Craig Irwin was another example of the clowns on Wall Street, and I do mean that in a derogatory term. Clown is an incompetent fool who shouldn't be doing what they're doing because they don't know what the fuck they're doing. Much like most of the clowns on Wall Street, just make sure everyone got that. Clowns on Wall Street. Back in 2019, the guys saying, no, sell Tesla stock, they're going bankrupt because I believe the FUD. There is a reason I started this YouTube channel in 2019 trying to explain why I thought these clowns were clowns. However, I just want to point out something a little bit strange. Craig doesn't have testicles. Now, I haven't personally examined the man, but I can infer this by the fact that he has a $250 price target. Split adjusted, most of you watch this, it'll be $83 per share. With Tesla stock, double, triple, quadruple his price target. He's merely recommending investors hold the stock despite believing that it's worth maybe, a quarter of its current value. This, to me, suggests that Craig doesn't really believe in his price targets. If he did, surely, and he had a pair of nuts, which as we've established, they're long gone if they ever existed in the first place, he would be backing up his price target with a recommendation that made sense, e.g., nearly 1,000 now, I think it's worth 250, sell it. But no balls, no courage. The guy's just a laughing stock, dude. Seriously. I would respect a Tesla bear who actually believes in their price targets enough to be making recommendations. Even though I would suggest their reasoning's off point and they're wrong, at least I would respect them. But this is just the most pathetic, and I want to underscore that, pathetic analyst I've seen on Wall Street covering Tesla stock. The guy doesn't have enough confidence or conviction in his price targets to actually suggest people do anything based on them. Here's my price target. I'm a moron. I believe Tesla stock is overvalued by a factor of about 4, but don't do anything based on my opinion, my belief that it's overvalued, because I don't really believe in what I'm saying. So I think we have established that Craig Irwin not only is not credible when it comes to Tesla, but also doesn't have testicles, which I personally believe should completely and permanently disqualify him from having price targets on Tesla stock. If the guy doesn't believe that investors should be following up based on what he thinks, how can anyone take take this guy seriously. With a $250 price target, that's again $83 split adjusted, with Tesla about 4 times that point, yet he doesn't have the courage or confidence or conviction in his price target to actually recommend investors take any action based on it. Spineless, gutless, testicleless pussy. That is Craig Irwin. Now, again, I'm just referring to this in a professional sense as it relates to his Tesla price targets. I'm sure Craig would be great fun to hang out with, but he's still a pussy. And I really do mean that. Craig, you pussy.
And you point out that they are the EV leader. You just think that there could be some better value elsewhere. Where are you looking?
Yeah, so I'm neutral and with a 250 price target on valuation, right? Tesla's the leader. They've created the market. They've done an impeccable job.
Credit where it's due. These things are true, and Craig is saying them, so I have to acknowledge those points absolutely valid.
I think there is much better value elsewhere. You've got a $900 billion company, 3 times the size of the largest automaker in the world, Toyota. And last year they had 1/10 of the sales. Nothing Tesla has can't be brought to market rapidly by Toyota.
This is just false. Not even Craig could believe this, surely. Let me ask you a question. If this were true, then why the fuck hasn't Toyota already done it? No, 2012, Model S wins every award ever. Why didn't Toyota bring out their own Model S competitor? Or the Model 3 taking over the whole planet? Why didn't Toyota do it? I mean, after all, Tesla's profit margins are multiples higher than Toyota's. Wouldn't it make more sense for Toyota to bring these much more profitable vehicles to market if they could do that quickly? I mean, bro, what? So the only reasonable explanation as to why Craig would say this is that he's either A moron, B, a fuckwit, C, a dipshit, D, a dunce, E, a clown. I'm just kidding, all of the above. I can't think of a reasonable explanation as for why Craig Irwin would say this. He surely can't believe this. He's not that dumb, right? Craig Irwin is capable of acknowledging Tesla's leadership in the space here. How could he credibly make this claim? If Tesla's making 3-4 times the profit on every vehicle sold versus Toyota, and Toyota could quickly bring a product that's comparable to market, what the fuck have they been doing for the last 15 years, Craig?
You've got a lot of other very good choices to invest in. I guess Ford and Ted Keynes tell a great story about the Ford Pro spinoff coming next January. You've got some good things going on with Stellantis. People love the Rivians. I can go on and on, right? That the Taycan outsells the 911 now. People have options.
Right again. Craig has said another reasonable thing. This is true. People do have options. Today, there are many electric vehicles available for consumers to choose from. Many options. Yet they're all choosing to buy Tesla vehicles, hence the 6, 9, 12 plus month wait times, insane price increases, crazy margins, still ridiculous wait times. Tesla still being production constrained for the 15th year in a row. That's literally the fucking point, Craig. People have options, and they're exercising their options and almost exclusively choosing to purchase the superior product in the marketplace, a Tesla.
And I think if you look at relative valuation and the credibility of all these other vehicles coming to market, I think Tesla will likely underperform over the next few years, and people are better off picking up another horse.
Well, you heard it here first, ladies and gentlemen. According to Craig Irwin, Tesla, as in Tesla stock, is going to underperform in the coming years, and people will be much better off investing in other stocks. I know I'm going out on a limb here, but I personally think that it is Craig Irwin's predictions that will underperform dramatically in the coming years as they have in previous years. But hey, maybe I'm wrong. Maybe Craig's right. Maybe I might buy some Nikola stock and maybe a bit of GM as well, because you did it, Mary, you led.
You do agree, though, with the point that Garrett was making, that retail investors are pretty important. This move does cater to the retail investor and tries to keep them in the game.
Retail is essential. Retail is essential for my entire space, covering sustainability and clean technology for the last many years. Yes, this will be positive for the fundamentals behind the way retail buys stocks. A lower price stock is easier for them to accumulate. It is also very good for liquidity, which is good for all sorts of different things. But obviously, retail is a part of that. I think it does show a sign of confidence, right? They're looking at 40,000 vehicles a week in production by the end of the year, more than 1.9 million units in capacity.
Now, I just need to call out the lack of logical consistency here. Craig Irwin knows Tesla's going to be around 2 million units per year in the next 12 months. He's just mentioned that Tesla's only making a fraction of Toyota's vehicles. For the record, Toyota may be around 10 million vehicles per year. Craig's just described how Tesla's increasing their production capacity about 50% year over year. Contrasting Tesla's valuation doesn't make sense. They don't make enough vehicles yet. Now remember, investing, price targets, this whole thing is forward-looking, not backward-looking. So the fact that Craig is willing to acknowledge Tesla's production is growing at a ridiculous rate. They'll be at 2 million units in no time at all. 20% of Toyota. Soon after that, it's going to be 40, then 80, blah, blah, blah. You guys see where this is going. So on the one hand, Craig acknowledges Tesla's production is growing at a staggering rate. Won't be long before they're bigger than Toyota, yet he's somehow trying to argue that Tesla's valuation, and remember, growth is an extremely important point in terms of price targets here. The faster the company is growing, the more generous the price target. He's just unwilling to acknowledge this and be logically consistent. This is a big red flag.
It's, they're incredibly well teed up to keep selling great cars. I just think that, people are much better off looking at some of these other options out there. And I think many of them are very high credibility and likely to be, much better value at this point.
The irony. Craig Irwin talking about credibility. Such comments coming from a guy who has literally zero of said attribute, no credibility whatsoever. I find this a little rich. Who's he referring to? Who is more credible or as credible as Tesla? Which other company is producing 1.5 million plus highly profitable electric vehicles per year that consumers are willing to wait up to a year or more to take delivery of? Oh wait, there are no other companies doing that. We have Rivian here struggling to ramp up volume production. Lucid struggling to ramp up volume production. A bunch of EV startups that have already gone bankrupt recently. Got a bunch of legacy automotive manufacturers espousing their plans without having done the math. I find myself questioning why Craig Irwin would say something that just makes literally no fucking sense.
Hey, Garrett, it's not just the stock split that has you liking this company, at least not in terms of the new news that's out there. The Inflation Reduction Act, you say, really puts them in the driver's seat. You want to explain?
Sure. So the law that was signed last week, starting January 1st of next year, both versions of their Model Y should be eligible for the $7,500 federal electric tax credit. That's really important because no Tesla vehicles were eligible for the tax credit previously. The law also disqualified about 70% of the available EVs on the market in the U.S. from any tax credit. So, the Model Y is already the best-selling EV in the U.S., with the Model 3 a close second. By the way, the lower-priced version of the Model 3 should qualify for the tax credit also. These two EVs are by far the best-selling EVs in the U.S., and so that really gives them a big advantage competitively starting in the new year.
So a couple of points on this. First of all, this doesn't actually help Tesla in terms of selling more vehicles. It does help them with profitability, although they're already printing more money than any other automaker on the planet. So it's not like they need extra billions of dollars of profits per quarter, but hey, they'll take them. And as a Tesla stock investor, so will I. But because Tesla's wait times are already 3, 6, 9, 12 plus months, this doesn't help them whatsoever. In fact, it's going to fuck Tesla in the ass. As a consequence, Tesla will then have to fuck customers in the ass by massively increasing prices just to ensure wait times don't get any more ridiculous than they already are. And speaking of Tesla prices, as I recently tweeted regarding the $7,500 EV tax credit, in my opinion, the 420 IQ move is as follows. By the way, for those who don't know, Tesla recently stopped taking orders for their Model 3 long range. Some of you may have missed that news, but it was very important and a very bullish signal from the company. I personally think this is what Tesla should do, and I also think this is probably what they will do, give or take. Tesla should immediately increase the price of the Model 3 rear-wheel drive by exactly the same amount as the EV tax credit to ensure there's an equilibrium between supply and demand. For those who are wondering, by the way, the EV tax credit cap for sedans $55,000 and SUVs $80,000. This would mean the Model 3 rear-wheel drive would still qualify for the credit. In addition, Tesla should also increase the price of the Model 3 Performance by almost the same amount, increasing the price ultimately to $69,420, A for the lows and B, so there's a reasonable gap maintained between the Model 3 rear-wheel drive and Performance. If the gap's too small, most consumers look at the 3 rear-wheel drive and go, why would I get that? I can get the Performance for almost the same money. I'll do that instead. So it's important for Tesla to maintain approximately the same pricing gap between each variation of their vehicles. I also believe later, Tesla should reintroduce the Model 3 long range at $64,200. I also believe Tesla should increase the Model Y long range price by almost the same amount as the tax credit to $73,420, so yes, it will still qualify for the credit, and raise the Model Y Performance by about the same amount to $77,420. Once again, it will still qualify for the tax credit. And I also believe that Tesla will do something close to this in the coming months. As I explained in this tweet thread, demand is already insane. In my opinion, it makes sense for Tesla to bump prices up to counter the $7,500 tax credit at approximately a 1-to-1 ratio. Otherwise, wait times will get even more insane. And to lift prices on non-eligible products, including the Model 3 Performance and long range, by a comparable amount to maintain a reasonable pricing gap. As I continued, Tesla will have no choice but to lift prices to keep wait times in check, regardless of what's happening to their actual costs, until Austin is really ramped up and maybe another US factory as well. Model Y alone is going to do 4+ million annual units long term, in my opinion. Tesla's current dilemma: we are forced to charge embarrassingly high prices to keep embarrassingly long wait times in check. And now a $7,500 credit, rip wait times and prices. And finally, The EV tax credit is so unnecessary and wasteful. EVs are now not only commercially viable, we've hit the tipping point. Don't need to be pissing away money. It's happening. The transition's happening. These incentives are completely unnecessary and counterproductive. Just like a low-key bailout to government motors and Ford, disguised as an EV tax credit, and falsely part of the Inflation Reduction, aka true name, the Inflation Induction Act. As I say here, not sure people realize it's 2022. EVs are happening. No help is needed. The technology has reached a tipping point. It's inevitable. And that's the end of my rant on the $7,500 tax credit.
Let's just talk about both your price targets right now. Garrett, you are looking at a price target of $1,245 in the next 12 months. Craig, you're just looking for $250. One of you is going to be massively wrong. How do you kind of duke this out?
Well, Becky's right. One of these two men is going to be very, 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 very wrong over the next 12 months. Please let me know in the comments below. I have no idea who's going to be wrong. Is it Craig with a split adjusted price target of just over $80 per share? Or Garrett with a split adjusted price target of just over $400 per share? Oh, and speaking of split adjusted price targets, for those who don't know, I have updated my Tesla stock price targets available exclusively on Patreon. So click the card in the corner or the link at the pinned comment to join. You can check those out. A few people had minor heart attacks after I updated these a day or two early, but just to confirm, my currently available Tesla stock price targets on Patreon are split adjusted.
Craig?
I'm looking at this and I think it's really just the timeline. Tesla's going to be a great company probably for the long run. It's really just the timeline. When you have a dozen real competitors in a maturing market, I think the relative valuation will be very, very different. And that is what's materializing quickly. Remember, they're going to be, about 500 EVs on the road by 2025.
I think what Craig was really suggesting there is there's going to be 500 EVs sold in total combined on planet Earth by 2025 by companies other than Tesla. I'm just kidding. He really means there's going to be 500 different EV models. And if there's more models, therefore, Tesla's doomed. Because if you release a product or tell people you're going to release a product, doesn't matter if it sucks shit, doesn't matter if you can't make it, doesn't matter if you can't ramp production, doesn't matter if it's compelling, doesn't matter if it's safe, doesn't matter about the range, the performance, features, functionality, none of that matters. If it exists, it automatically means Tesla's in trouble and therefore don't buy Tesla stock. But then again, don't sell it either because despite my price target, I don't really believe in it. So don't do anything based on anything I say. But remember, the competition is coming. All 500 different models of it.
If you hang out at the fast charging stations, you'll see people love the cars they're buying. They're evangelists for the brands they own. That was the early driver of success for Tesla. Tesla's done a good job, but there are many fast followers that don't have to do as much heavy lifting as Tesla did at the beginning.
Garrett, you think he's nuts? You guys must completely disagree with each other.
I don't think he's nuts.
Well, I do.
No, but bears have been making the valuation argument for a long time, and it just hasn't worked because the stock keeps going up.
Now, this is fair and reasonable, keeping in mind, of course, we did see Garrett's own history. He was one of the bears saying sell Tesla stock when it was like a $50-60 billion market cap in 2019. Same time I'm starting this YouTube channel going, are you guys f***ing serious, bro? Hello? The key difference here is Garrett has finally woken the f*** up and Craig Irwin is still asleep.
Yeah, we think the play here is really a tripling in Tesla's earnings over the 2021 to 2024 time frame.
Is anyone watching aware of any other companies already doing many billions of dollars of annual profits who'll see their earnings triple in the next few years? Please let me know in the comments below.
That's how we see the earnings growth playing out. And we also think Tesla has a huge cost of capital advantage. You look at the two new factories they're ramping up right now in Germany and in Texas, and their plans to grow their production by a factor of 40 between 2020 and 2030. And so we think Tesla that the multiples are justified. So the basis of our price target is 60 times our 2024 earnings estimate, and we do think that's that multiple is justified given the growth that they have ahead of them.
All right, let's book this now. A year from today, let's all meet back here and hash this out and see who was right. Okay, guys?
Well, place your bets, ladies and gentlemen. 12 months' time, when Craig and Garrett are back on CNBS, who's going to look like the biggest clown? We already all know the answer, don't we? But Craig Irwin continues to confuse and puzzle me. I just don't quite understand why he says what he says. I genuinely don't believe he believes what he says, but he still says what he says. And if anyone happens to know Craig's postal address, please let me know. I'd love to send him a pair of nuts. Something he's clearly wanting for. And happy Tesla stock split day. By the time many of you watch this, the split will already have taken place. Let me know in the comments below. After the Tesla stock split, how many shares of Tesla stock do you currently own? And lastly, don't forget you can support the channel by joining Patreon with the card in the corner or the link at the pinned comment. Not only will you gain instant up-to-date access to my split adjusted Tesla stock price targets out over the next decade, you'll also unlock an archive of well in excess of 100 exclusive videos, loads of other content and perks. So I'll see you over on Patreon. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks, and get some free stocks and crypto. Check out the links in the pinned comment below. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. So check out the links in the pinned comment below, and thanks for your support. And if you're still watching, you're awesome. I read every single comment on this channel and I really appreciate your feedback. So if you've got any thoughts on today's video, questions, comments, or suggestions for a new video, let me know in the comments below. Check the cards on screen now to browse the merch store, join Patreon, or watch the next video.